Hello, today I want to talk about the true secret of Warren Buffett's wealth, how he became so rich, and the one thing that no one talks about simply because it's just not sexy. So a lot of people have written books about Warren Buffett, about his investment strategy, how he's a value investor, how he analyzes companies, how he looks for those cigarette butts companies that you can take a few puff out of and convert it into a profitable investment, how he has been opportunistic buying companies in distress, how he's so smart, how he reads so much, so on and so forth. But none of these books are talking about the real reason of why he has been able to accumulate so much money. And the reason is longevity. So, yes, simply enough, Warren Buffett has been investing for a long time. He started investing when he was 11 years old, and now he's 93 years old. So that means that he has been putting his money in the market for about 84 years. Okay, so just think about this. A regular individual doesn't start investing until age 25, okay? And a regular individual just stop investing at age 65, and at that time they start taking money out for their own enjoyment. So if Warren Buffett would have been a regular person doing what regular individuals do, and his money wouldn't have been in the market for such a long time, and we would have never known about Warren Buffett. His 99% of his wealth was built after the age of 50. Okay, so there is room for all of us to see our money growth, but yes, because of the exponential factor of how money compound interest works, then it's just we see almost a flat line, and then it starts growing very rapidly. And this is the opportunity that all of us have. We all can put money into the market and let it see it grow little by little, and then as time accumulates, it just start growing faster and faster. So let's imagine we have $1,000, right? And with the rate of return of the stock market, which is between 8 to 10%, let's say 8% to be conservative. If the stock market rate of return is about 8%, that means that your money will double every 9 years or so. So let's just say now that I have $1 million. In about 9 years, if I don't touch it, I will have $2 million. And if about 9 more years, if I don't touch it, I'm going to have $4 million. And then in about 9 more years, if I don't touch my money, I'm going to have $8 million. So notice how the time frame is the same, but the velocity of the money increasing is faster and faster. It's just bigger and bigger chunks. Now, if Warren Buffett started investing at age 11 and is still at age 93, he's still investing. That's 84 years that his money has been just working for him, and it is just natural, even without being a genius like he is. But any regular individual can have the potential to accumulate lots of money. So it's just time in the market. Okay, so how can we use this information for our use? Okay, so I use for my own investment, or the way that I spend my money that I have invested throughout the year, is I use something called the 4% rule. That means that if I take my regular living expenses and I multiply that by 25, that's the amount of money that I need to save in order to have my current lifestyle. So, for example, let's say that my lifestyle is $50,000 per year, for example. Okay, so if I take 50,000 and multiply by 25, I just need $1,250,000 in order to be able to withdraw $50,000 every year for the rest of my life. And of course, I say 50,000, but that's that is taking inflation into consideration. So I mean, next year it's gonna be more than 50,000, and then the next year after that it's gonna weigh a lot more. So we are just calculating with inflation included. And the reason is simple. Let's say the market is growing at 8% and I'm only taking out 4%. So I'm still leaving money in my account for that money to continue growing and just continue increasing my lifestyle. So this is something that all of us can put into practice. We can just accumulate enough money until we have to sustain our lifestyle, and then we can just go to Mexico and drink margarita for the rest of our life, or we could quit that job that we don't like, or we can start working on the things that we are passionate about, not having to worry about paying our bills because our financials is taken care of. So you don't need to be Warren Buffett in order to be a great investor. There is a perfect, beautiful vehicle that I call the index funds, which is I invest in the whole economy of the United States, in the whole economy of Canada, in the whole economy of Europe, and that usually generates the average return that I need, which is over 8%. So just take that into consideration. You don't need to be as smart as Warren Buffett. You don't need to read all these kind of financial statements. You don't need to read every day. All you need to do is leave your money in the market. Thank you so much for watching, and talk to you soon. Goodbye.